Hi there guys, I hope you're all well and welcome back to another video. So this is the first post in a while, it's probably been 5-6 weeks. You might have also noticed the channel name has changed from Dark Horse FX to Sam T Trades. Before we get into the video, I'm going to quickly say it and then obviously it's done with. I've personally decided to take a step back from Dark Horse FX and just focus on my own stuff. It's literally just because I want to focus on my own trading, because obviously that is what makes me the most money, so I'm kind of tunnel vision on that. So yeah, that's that's pretty much it in a nutshell. This video I want to try keep short, quite snappy. I don't want this video to be one of them 20-minute videos where you don't make it to the end. I want you to obviously be able to watch the video, get through everything that you need, and try learn something from the video. So we are going to go over my FTMO verification pass, and this is the most recent one. Here you can see top right it says Sam, minimum trading days all done. Max loss was 1.5%, and the profit target obviously was achieved. Now what we will do, we will go through this. There's only a few trades. Most of these actually are just trades to pass the days. So what we will do, we will go through this trade by trade. Hopefully you can learn something from the analysis, and I will basically go over what I was thinking and why I took the trades. Before I quickly go into it, I just want to say on this verification, I was risking 2.5% a trade. With FTMO, let's be honest, challenges and verifications are not made to be passed. My personal approach with FTMO is high risk because my data supports me doing so. I have a win rate on the daily for about 70 to 80%. So for every 10 trades I take, ideally, based on the data, 7 to 8 of them trades will win, or at least go break even. So that is the way I trade. It warrants me being able to go higher risk with the challenges and verifications. Obviously, I'm not saying this is the only way to do it. There's multiple ways to trade, multiple risk to rewards, all of that good stuff. Just make sure that you track your data, and then from then you can just have a look and see what risk you want to do. So let's look at the first trade here. So this was pretty much the first day. This trade at 0.01 was to just get the timer going. I did have this challenge sat there for about 6 months, so I did need to get it going by the end of Feb. But yeah, first trade here was a buy Australian dollar, US dollar, 0.7265, and this was a trade on the 38 fib. So let's have a look at the trade. So I will quickly do this, and then what I will do, I will rewind the chart to this point here. So what was my thought process with this trade? Now, of the big move up, let me just put this on the screen. Of the big move up, there was a 38 Fibonacci, which had obviously been respected in the past, all that good stuff. So I did have an area here I was interested in, a nice liquidity wick. What you tend to find, guys, in the market, what works in the past will usually work in the future. So when you see these big wicks here, there tend to be areas where in the future price may give a nice reaction from if there is an added confluence. This trade here, I had this wick to work with. I had the 38 Fibonacci, and also if you look right, I had the 0.7250 round number. So this was a 3 confluence area. As mentioned, I was only aiming for 1-to-1. So let's go into the 4 hour and just see what happened with this trade. So the trade missed pending here, and most people at this point would cancel their pending. This is the importance of data. My data shows that unless a trade misses by spreads, the trade is still valid because they do tend to still trigger and go on to win. So you can see price then triggered and went into some drawdown. But then there you see a few hours later, I was in this trade for quite a while in all fairness, price did hit the TP. So just from a daily perspective, let's just go over that one more time. Key level here, 38 fib of the move up, and also a 0.7250 round number there. So really good start to the verification. Obviously, if we are looking at here, first trade, you're 2.5% up pretty much, so you're halfway there. So for me, it was then a case of, right, let me just wait for the next trade. So this trade actually hit TP at 8:30 on the 9th of March. Then at 11:30 on the 9th of March, I actually entered a GJ trade here, which once again won for 2.3 or 2.4% if you want to round it up. Let's have a look at what this trade was. So it did have an EMA, and it was this trade here. So let's zoom in and have a look. So as we said on the previous one, you can see here, if there's been a big wick before, there's a good chance it will happen again. And what can you see? Reactions, 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 reactions. Every time price pretty much hit this level, there was a huge reaction of probably over 100 pips. So for that reason, I was interested in this area. We also had an EMA here, and it was almost like a break and retest of this low. So there were loads of confluence to work with this trade. Once again, if we go into the 4 hour, we'll just have a look a bit more zoomed in to what happened with this trade. So once again, 1-to-1, 30 pip stop loss, 30 pip TP. That's what I was aiming for. And you can see, look at that. Within the 4 hour candle, and I'm probably even going to the 15 with this one, you can see price came up to my area, a slight bit of drawdown, which once again, you've got your 30 pip stop loss. Your stop loss is there for a reason. That is just to make sure you've given the trade enough breathing room. And then you can see within a couple of hours, price went down and hit our take profit. So with that, once again, 2 trades taken, and you are about 4.5% up at this point, or 4.6% up. So with this, I was in a really good position. I was 2 days into my verification. I was pretty much $500 off passing. So then what I did, instead of risking 2.5% for these next trades, because I knew I was trading 1-to-1s and I only needed 500, I risked on the next trade about $600. And the reason I risked 600 was because spreads, commissions, anything like that, I wanted to make sure if price hit TP, then I was completely passing. Because I've had it before with a challenge where I was about 2 cents off passing and the trade closed and I had to basically find another trade and try, obviously, get it done. So it was pound yen. So this was on the 16th. So about 7 days later. So obviously I am waiting for the best opportunities. It was on GJ once again. So what I will do, I'll get rid of this analysis here and I will show you what happened here. So what it was, I had a 61 Fibonacci. Let me just get rid of that EMA. So yeah, I had a 61 Fibonacci of this move down. And once again, a nice liquidity wick. If we do look left as well, there was a bit of a tap there. So you can see this level has been respected quite a few times. And again here. So with this trade, I was just looking at this area here, hoping it held. Now, this trade, I did take a risk on. So if we just go back a candle here. So in my notes, I did actually on my personal account close this trade break even. The reason for that is because it was FMOC, or FOMC, sorry. So with that, it was the US interest rate. So you can see what happened. Price came up, triggered, and if you look what happened in this next candle, there was actually a reaction there of about 20 pips. However, then what happened was FMOC came out, and because it was only $600 risk, I thought, well, you know what? It's higher risk, but I'm happy almost doing a coin toss, because either this trade, the news is going to help it win, or it's going to make it lose. I only need 600. If this trade loses and I lose the 600, then all that means is that I will have to double my risk on the next trade and risk 1.2, which is easy, because if you think I'm initially at the start risking 2.5% or 2.25%, that if I'm risking 1.2 if this loses, it's still lower than my original risk. So that was my thought process with that one. Let me get up the next trade on the matrix. So that was that. Buy here, 0.01 euro New Zealand. That was literally just a pastime. Get another trading day on the board. Going into this euro New Zealand buy here, And this trade here, I don't actually know why I took this trade. It was closed at break even, so I'm not going to go over it because I've genuinely no idea why I got into this position. However, this trade here, Euro New Zealand once again, and this were on the same day, so I don't know what were going on. But this trade here did actually end up closing break even. Euro New Zealand, let's have a look at what happened. Let me rewind the chart to this point here, and let's go full screen. So, my thought process with this trade was I'd seen that price had obviously made a leg up. So I got my Fibonacci, drew it from the low point to the high point, everything's good. 50 fib was sat on this level. Because there were no structure to work with, I had to go far left to try and find something. And when I say try and find something, it wasn't to force something. It was simply because below this point here, there was no structure further right. So what I did, I realized, look, there's a nice low here, which has been obviously respected. If you wanted, you can go further left and say, look, tap, 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 and again, tap. So that's fine. So we had the key level, we had the 50 fib, everything's looking good. And then what happened with this trade is if I go into the 4 hour, I ended up closing it break even, because what happened was, if we see price come down, this trade triggered on the Friday. So Friday at 4 p.m, I was like, you know what? I'm no longer happy being in this trade due to the time of day. So you can see here, you were in the trade. It did actually go about 20 pips, 25 pips into profit. But then because of that, and due to the time of day, with it being obviously at 4 o'clock on a Friday, I was not willing to take the risk on the trade. Closed it break even. And you can see if I'd have stayed in the trade would have lost. So, good decision making to get out of the trade. Me personally, if I'm in a trade on a Friday and I'm still not break even and it gets to about 4, 5 o'clock, I am going break even on that trade because it's just not worth the risk. There's Monday, Tuesday, Wednesday, Thursday and Friday daytime to find good trades. Don't be risking a week's worth of gains on a Friday. It's just pointless. So that was that trade. And then finally, Australian dollar, US dollar, this trade here, which did actually pass me the challenge, the verification, at 1.2%. So as I mentioned, we was 4.5 up. We risked 600 to make 600, that lost. So because we risked 600 here and lost it, we then now risk 1.2. Because we risk 1.2, let's say, for example, this trade lost, I would then risk 2.4 on the next trade, which would take me back to my original risk. So if you look, obviously, from a risk management perspective, in my opinion, this is the best way to do it. So AU, let's have a look at what the trade was. And if we look, it was this here. So if I rewind, go back here. And what I'll do, I will get rid of these drawings here and go full screen. Now, this trade here was actually a really clean trade. If we look from the start of this move down, we had a 61 Fibonacci. We also, if you look, we had a low here, so a nice reaction, breakout, break back in there, reaction again there, and then look, reaction, reaction. So this here was a really solid key level. So if we go into the 4 hour, just to have a look what happened. This was my entry area up here, once again targeting 1-to-1, and you can see price triggered and hit TP with this candle here. So obviously with this one did go back up to entry, however, and I might have to go into the 15 for this one, you can see just price hit the 30 pip TP and then went and would have closed you out break even. So this could have easily been one of them trades, guys, where this missed by spreads and then I was taken out and I had to do another roll of the dice. However, the trade won. The confluences were as followed. Key level, which I've explained, 61 Fibonacci, and that made for a really good trade. As well, if you wanted, there was obviously the 7,550 round number as well for added confluence. But yeah, that was pretty much how the verification was done. I do plan on documenting some live trading for the future with obviously FTMO, payouts, stuff like that. But to be honest with you guys, I'm not here to flash money about and do all that kind of stuff. It's mainly just to show you that it can be done. So if you have made it this far to the video, guys, thank you very much for watching. I did say, obviously, the channel is going to be a lot more active again, back to weekly uploads, weekly outlook videos, all that good stuff. And yeah, it will just be under my name, Sam T Trades. So any questions at all, leave them in the comments regarding this verification. Any content you want to see on the channel, please leave a comment and do that. But yes, guys, thank you very much for taking the time to watch this video, and I'll see you in the next one.